My recording has started. It's officially afternoon. Good afternoon, everyone. My name is Christine Perez. I am AFP Miami President and AFP Education Co-Chair alongside my co-chair, Carla Hernandez. We're so excited to welcome you here today to our session. Really excited for you all to be here. If you would like, please drop in the chat what organization that you're representing, just so our speaker, Jackie, who you'll learn more about in a little bit, can learn more about you. But we are so excited to have you here today. So a couple announcements on behalf of the AFP Miami chapter. If you are in Miami, these are for you, but also if you're in not in Miami, we have our education sessions that are virtual, and then we open them to anyone in the community because we know access to education is so important and professional development as well. So my Miami folks, National Philanthropy nominations are open and available through May 15th. So if you're thinking about honoring someone in our community or a group that's elevating philanthropy, please make sure that you submit by May 15th. I will drop that in the chat once I'm done presenting. And National Philanthropy Day is in November 6th. So you definitely want to join the fun. It's a great day to elevate philanthropy and to celebrate it in Miami. So coming up also for our first in-person AFP Miami Mixer, it's coming up on May 21st from 5:30 to 7:30 at FIU University. The event is completely free, whether you're a current member, a future member, or you just want to learn more about the nonprofit community and the fundraising profession. I'll drop information in the chat as well for you to register. But if you're in Miami, we'd love to have you in person. We'll have light bites and some cocktails, and it should be a great time. And again, that's in person. Now, coming up, our next education sessions in May, hot off the press, we have a session May 14th from 12 to 1 p.m. via Zoom. It's called Taking the Leap, Going Solo in Nonprofit Consulting or Launching a New Nonprofit. This session will be a panel discussion, and it should give you some new insights on whether going solo is the right move for you or the benefits and reasons why or why not to open a new or start a new nonprofit. And then right around the corner, June, we have another Zoom session, June 4th from 12 to 1 p.m. The session is Navigating the 2025 Tax Laws, Strategic Guidance for Nonprofits, and that's going to be presented by a donor boom. Really good content for us fundraisers as we're navigating this new the new tax laws and how they might impact our fundraising. Then finally, for my AFP Miami members and non-members, or future members, as we like to call you, we have free mentorship opportunities up to 3 months, whether you are a member or not. You can get a free membership regardless if you're an AFP Miami member, but we wanted to open that up because we understand how important membership is and we understand budget cuts as well. So I'm going to drop all of that information in the chat, but now it's time to chat and learn more about our session today. So our speaker is Jackie McLaughlin, and she is a CPA, Technical Reviews and Training Manager from Chazin, our fabulous chapter sponsor here at AFP Miami. So Jackie is a CPA with over 35 years of accounting experience, including 18 years dedicated to nonprofit organizations. Starting her career at KPMG auditing tech startups, she advanced to audit leadership roles in Fortune 500 companies before transitioning to nonprofit financial management. At Chazin, Jackie oversees technical reviews, training, and financial reviews, ensuring nonprofits meet the highest standard of fiscal responsibility. An accomplished educator, Jackie spent 10 years as a top-rated instructor for the nation's largest CPA review provider and has taught financial tools and strategies to small business owners and CPAs. Her sessions empower association professionals to innovate, lead with confidence, and drive positive change through financial foundations. Now, without further ado, I'm going to turn the conversation over to Jackie. Welcome, Jackie, and thank you for being here.
Thank you so much for having me. And after that introduction, I'm sure everybody on this call is going, oh no, we're going to listen to an accountant. This is going to be the dullest thing ever. But everybody, I'm actually talking, an accountant is going to talk about storytelling today. So let me share my screen and make sure, Christine, can you see that? Okay, okay, perfect. So we're going to talk about storytelling today and really financial storytelling. But again, don't worry, I'm not going to speak accounting on all of you. For all of you, I'm going to speak regular English that you would speak with your donors. And you can see the title of this is Engage Boards and Improve Your Impact. However, any story you might tell to a board would also be very appropriate to tell to prospective donors or grantors. So before I get into the slides, first I want to talk about what's involved in storytelling. So all of you have watched movies or read novels or fictional books in your lifetime. And if you really think about the story that's being told in any movie or book, the story that's being told is that there is a character. The character wants something and struggles to get that, overcomes the struggle, and in the end, the character usually makes changes internally. So, when we're talking about financial storytelling, the character is your organization. And unlike characters in a movie or a book, your organization is always going to have struggles every single year. Now, they might not all be insurmountable, but because your organization is sitting in an economic marketplace, your market conditions are always going to be changing. And by market conditions, I mean who your target is for donations, what they're willing to give. Christine touched on this. In the future, you're going to have a session on the tax-related impacts of the One Big Beautiful Bill. And when you have that session, you're going to find out that different people are now incented to give than who were incented before. So that's what I mean by you're in a changing marketplace. And because your organization is in a changing marketplace, it's probably always going to go through struggles. Again, not, oh my gosh, it's going to kill you struggles, but there's always new challenges. And so the trick is to learn how to adapt and overcome those challenges and then change your organization to adapt better. So examples, I worked for a membership organization. This membership organization had plenty of money, huge reserves, being profitable every year. And yes, nonprofits are allowed to be profitable every year for literally 80 years, 80, 90 years. It had been in business 100 years. The last 10 years before I got there, it had started showing losses and it was eating through all of its savings because of these losses. So when I got there and I implemented some of the processes and the storytelling techniques I'm going to explain to you today, in 1 year, we turned the organization around from a loss, multiple years of losses, into break even, which is a huge jump. And then the next year, a little bit of profit, we kept building after that. Similarly, after that one, I went to another small private college. Same story. They'd been in business over 100 years. They had huge savings. They were eating through them in the current climate. And so we analyzed the financial data. We told the story to boards and management so that they could understand it. And based on that story, they helped the organization overcome their struggles, pivot, and of course, the organization changed in the end. So you have to realize that accounting data does tell a story because everything you do in your organization, absolutely everything, has a financial consequence. One of the pushbacks I get when I make this statement is, hang on, Jackie, volunteers don't have a financial consequence. They volunteer. But they do have a financial consequence because if volunteers weren't doing this work, you might have to contract with or pay somebody to do that work. So they do have a financial consequence. Similarly, I like to use an example of feeding homeless people because it's, a nice generic example that everybody can relate to. They'll say to me, "Hey, in-kind donations have no financial consequence." Not true. They do. So, in my example, if an organization that fed homeless people got large food donations, if they didn't get the donations, they would have to go out and buy the food. So, everything has a financial consequence. And here's the other thing, every single number reflects something that actually happened in the lifetime of your organization. Every number is representative of a real world event. So, accounting, i.e., financial data, isn't just numbers, it's a record of every action, every decision, and every priority your organization has engaged in or will engage in. So, your financial statements are chapters in that story. And I like to compare the chapters to, since it's basketball season, LeBron James' basketball career. So, first you have the statement of activities. Now, for those of you more familiar with for profit financial statements, this would be called the income statement or the P&L. In the nonprofit world, it's called statement of activities. But because people are more familiar with the for-profit terminology, I'm going to use that. So I'm going to call this the P&L. The P&L can be compared to LeBron James's season stats. At the beginning of the season, LeBron started with zero everything. He played his first game, he put points on the board, he starts building stats. How many points did he put on the board? How many fouls? How many assists? And whatever else these statisticians track. Believe it or not, I don't know that much about basketball. But every single game that he plays is going to add to those season stats. That's the P&L in your organization. So we're talking about revenue, we're talking about expenses, are your version of the season stats. Now, LeBron may have a bad game, but that doesn't mean he's going to have a bad season. He can come back from a bad game. Similarly, your organization may have a month that's not going to so well. That doesn't mean you have to have a bad year, and you don't if you learn to interpret the organization or the numbers and pivot the decisions your organization's making the rest of the year. So one bad month does not make a bad season, or in your case, a bad year. Then you have the statement of financial position. Now, most of you are probably more familiar with the term balance sheet. So I'm going to use the term balance sheet. Balance sheet is LeBron's career stats. So at the end of LeBron's season right now, his season stats will zero out. And I know that because they have to zero out because he's going to start next season with a clean slate. So when his season stats zero out, they don't just disappear into nothing. They aggregate in with his career stats. So his stats this season will will accumulate with his career stats since he's been an NBA player. The same is true with your organization. Every year, your season stats zero out. Season stats, meaning your revenue minus your expenses, is either a profit or a loss. It's going to zero out and it's going to accumulate in the balance sheet and become part of your organization's lifetime story. That's why the balance sheet tells the story of stability and strength, whereas the P&L tells the story of performance this year. And then you have your statement of cash flows, which is really where did the money come from, when did it come in, and where did we actually spend it? And oftentimes, I'm not going to spend a lot of time on this, but oftentimes there is a difference between cash flow and revenue or cash flow and expenses. So I put this up on purpose. One, because we're going to use this for some numbers, but also so that you can kind of look at all this and feel a little bit overwhelmed. At least if you're like most people, you look at spreadsheets of numbers and you feel a little bit overwhelmed. And that's going to become important later on because we're going to demonstrate ways that we can take this overwhelm away and deliver the same information. This is an example of a statement of activities. I've been referring to it as a P&L. If you look to the very bottom, and it might be cut off a little, I can't tell, you see total change in net assets, and it's a positive 318,000 in 2025.
A little
It's a
cut
net,
off.
it
You
is,
can,
yeah,
yeah,
not sure.
and it's all right.
Okay. But it was a negative in 2024 of 225,000. It's a positive in 2025 of 318,000. So just keep that in your mind. It was a negative 24, it was a positive in 25. The other thing to keep in your mind is almost halfway, a little less, little further down than halfway, you see conference related expenses. And in 2024, they were 922,000, and in 2025, they were 308,000. So just kind of keep that in your mind as well as we continue through. This is the balance sheet, again called Statement of Financial Position, and this is where your annual performance zeroes out at the end of the year down into this area called net assets. It zeroes out down there and becomes part of your organization's profit or loss since time began. So, one of the things that's important in storytelling is to give context. So, let me go back to LeBron James. When LeBron first came on the scene, his first season as an NBA player, okay, maybe I told you he put 300 points on the board. By the way, I don't know basketball, so that might be unrealistic, but I don't know. So maybe I might tell you, well, LeBron put 300 points on the board in his first year playing professional basketball. That statement by itself is meaningless unless you're a basketball fan. If you're a basketball fan and you've been following other careers, maybe Michael Jordan, then you might go, oh my gosh, wow, Michael Jordan never put 300 points on a board in one season or one game or whatever, but LeBron did. Michael Jordan gives the story context in LeBron's year one of being an NBA player. At this point, LeBron's been playing long enough that if you're a basketball fan, you might be watching what he's doing this year and you might be comparing it to what he did last year. How's he playing this year versus how did he play last year? That gives it context. Again, by itself, LeBron put 300 points on the board. Absolutely meaningless. But with putting some context into it, now it's coming to life. Now, certainly with LeBron, we don't have to give a real full story because he plays professional basketball. So the mission of his team is to win. But in your case, as a fundraising professional, you may need to give context with respect to what does your organization do? What is the impact it's having in the community? So again, going back to my feeding homeless people example, you might have to put your financial number in context of our mission is to feed people who are homeless. Now, here's what's going to draw a question mark if you're sitting with a potential donor or grantor and you're telling the financial story. If your donor or grantor sees that you spend a lot of money housing homeless people, because they might say, what are you doing? Your mission is to feed, not to house. So, as you're making decisions along the way in your organization using your financial data, you always want to benchmark that against your mission. And it's very common in my example. We have a client who feeds homeless people. A couple winters ago, it was exceptionally cold in their part of the country, and they ended up in the month of December, I believe, incurring elevated charges for hoteling people. And when it got to the board knew how to read financials. The board's job is to keep the organization on mission. And the board said, what are you doing? Our mission isn't to house homeless people. I understand you have big hearts. It's freezing cold. You want to house these people. Let's go out and find a partner organization whose mission is to house people. By making that statement, yes, this organization had a bad month in the month of December because they incurred all kinds of expenses that was against their mission, but the board was able to bring them back to the task, which is feeding, not housing. So again, one bad month did not make a bad season, didn't have to. So you always want to align your financial data with your organization's mission and goals. That's the center. Now going to the left, because of course I'm not a linear thinker, believe it or not, so I'm not going left to right, I'm going center to left. So center to left, we want to put your financial story into context. And usually that means comparing your current year numbers with your prior year numbers and or your current year numbers with your budgeted numbers. But most importantly, on the far right, the important thing is to add narrative around why the changes occurred. This is the storytelling part of that. We're going to get into an example in just a minute. So at the top in the maroon colored box, you see here's the before financial storytelling. And I asked you on the previous slide, I pointed out those conference expenses and how they had decreased between 24 and 25. And I asked you to just kind of keep that in mind. This is why. Before, conference expenses decreased 67%. Ho hum. That's boring. It doesn't give you any story with which to make assumptions, make decisions, draw conclusions, pivot. It gives you nothing. So let's talk about after. After is we moved our annual conference from New York City to Indianapolis. Although sponsorships for this event decreased by $270,000, sponsorships meaning, incoming money, costs decreased 614,000, allowing us to end the year with a surplus. Isn't that far more compelling and interesting than saying your conference expenses dropped 67%? Again, ho hum, who cares? But now we know why, because last year your organization might have made a strategic error by holding their conference in a high cost of living area in New York City. So you've moved it to a less expensive place. Let's look at the second paragraph. Lower registration costs, and I should have written this in the story, but which occurred because it's in a less expensive city. Lower registration costs drove a 20% increase in attendance, bringing an additional 100 individuals to the conference. Okay, now this is where I made it a little boring to protect the identity of this client for cost-cutting training and new opportunities to expand their network. That's a little boring, but again, I wanted to, put some privacy around this true story here. But this is a membership organization who strives to keep their members on the cutting edge of what's going on in their industry and, of course, expand networks. So I also showed you, when I showed you those financials on the Excel document, I said, are you feeling overwhelmed right now? You probably are. And frankly, I kind of hoped you were, because here's where we can help the storytelling process a little bit more. Instead of presenting those very boring spreadsheet numbers, visuals can make the story come alive. So don't worry, I'm going to blow up the right-hand visual on the next slide, but this slide is intended to show you the original way I showed it to you on the left in a spreadsheet. Kind of boring, kind of overwhelming. but how we can bring it to life with visuals. So I'm going to click ahead because here it is blown up a little. So you could see very quickly and very easily from this visual, orange is 2024, blue is 2025, that yes, total revenue did decrease in 2025. But holy moly, look at how much expenses decreased between 2024 and 2025 significantly. And you can see this at a glance without dealing with spreadsheets where you've got to figure out where your eyes need to look. This kind of hits you in the face, the visual. And the nonprofit's version of profit or loss is this thing called change in net assets. Now, this is operating. I'll explain that quickly in just a second. But you can see in 2024, this graph is below the line. That's bad. That means big loss. Whereas in 2025, this graph is peaking up above the line, which is progress because it's a profit. The next one over is just their investment revenue. So less important than the bars to the left. Those are the most important because that's what nonprofits leaders can control is the first three bars. This fourth bar is just investment income. So the final bar on the final right-hand side, you can see took the organization from that graph that reaches below that bottom line, which is bad, it's a loss, to above the bottom line, which is better because it's income. So this graph helps the organization understand where their revenue dollars were coming from. And for all of you who might be advancement fundraising professionals, this is going to be important. Now, in your case, I might break this graph down differently between individual donations, corporate donations, planned giving, whatever. I might break it down differently. But in this particular case, it's broken down. You can see between membership, conference registration, training, which is virtual and live, a certification program, and sponsorships. So again, this is revenue. You can see that membership decreased a little bit between 24 and 25. So if you're in the membership department, this is not the best news for you. It means you've got to pivot and figure out what you can do, who you can target differently, maybe how you can change your messaging to increase those new memberships and or renewals. You can see next their registration is up, and we learned on the last slide that this was because they had lower cost of attendance because they moved from New York to Indianapolis. Now, their training, their virtual live training, it's a small piece of revenue, but you can see between 24 and 25, it's grown, and that's going to become important. Same thing with their certification. And then you can also see where they did lose a lot of sponsorships by changing their location from New York to Indianapolis. However, they saved a lot of cost as well. So the fact that they lost sponsorship actually wasn't a bad thing. And that's an important lesson too, because to people whose job it is to fundraise or sell sponsorships or bring revenue in, you could look at this and go, oh my gosh, this is terrible. No, it wasn't terrible because, yeah, you lost sponsorships. People wanted to sponsor in New York City rather than Indianapolis. So, yeah, that affected things. But you saved costs. So overall, your conference showed a profit instead of a big loss. And by the way, so back to one of my original stories about the membership organization I worked for. When I got there, we did 12 events. We'd been doing those 12 events for probably 50 of the 100 years this organization had been afloat. And when we changed the financial data and started telling, not changed it, but organized the financial data differently and started telling the story was that 8 of the 12 events our members didn't want to go to. And how do I know that? Because they weren't paying to go. So they didn't value those 8 events. People value what they're willing to pay for. Now, you can imagine in my real life example here, I also had a bit of an argument with our social media people because our social media people were telling me all about the followings and the likes and all of those social media benchmarks, which were headed in the right direction. We were growing our social media presence, but those people weren't buying or giving. And at the end of the day, you can have all the likes and followers you want, but if they're not contributing or buying tickets to your conferences, it doesn't matter. So, in my example, when I was able to show the leadership team that for, I don't know, 10, 15 years, 8 out of 12 events we were doing weren't valued by our members. And I knew that because our members weren't paying to go and they were showing a loss every single year. I made the argument again, our members didn't value it. It was a big debate, but we stopped doing those 8 events. Oh my gosh, you tell a membership organization to stop doing 8 of 12 events, they freak out, and they did. But the consequence of that was we could put more resources, both labor and money, into the 4 events that our membership base was telling us they valued, and they were telling us because they were buying sponsorships and tickets. And we took our 4 events and we made them bigger, better, and better than ever. And a nice unintended consequence was that our staff wasn't as burned out because they were only planning 4 and not 12 events, which helped to make those 4 bigger, better, and better because now they had more creativity, more energy to put into the 4 we did. And what happened? Inside of a year, they went from 10 years of losses to break even, all because of these 8 events. But what else happened? Now we had bandwidth that every year we could introduce a new idea for a new event and test it in the marketplace and see if our members valued it. And if they didn't, we didn't do it again. And if they did, we kept doing it and added a different type of event to our annual event calendar. So here's another visual representation of the expenses, and mostly you'll see on the far right how much the total expenses came down between 24 and 25. And about a third over from the left side, you'll see that a large percentage of this is those conference-related expenses. But also look at what you see on the far left. The salary and benefits expenses came down as well. What happened? And you're going to see what happened in a couple of slides. So now we're going to put all that together, the storytelling and the visuals. And I just put this one up again to remind you a little bit, but I'm going to make some meaningful data out of this one. Now, the meaningful data I'm going to show you is very relevant to your board. It may be relevant to grantors, depending on what they look at. But what you want to focus on here is this total bank and investment accounts up at the tip top. So it's $762,000. And then draw your eyes down to the net assets, which are a total of 400, very bottom, $491,300. This particular example, and this is important, doesn't have any donor restricted net asset. It has no donor restricted. Okay, these numbers are going to become important right here. So I've taken the bank and investment accounts. Now I put in $1 here on these 2 lines. There's no dollar on that previous slide I told you, but if any of you take these slides and want to use it as a template in your own organization, that's why I put $1 in a plus and $1 in a minus here, just so you could see. But what this results in is that in this case, all of your cash and investments are available for unrestricted purposes. I know that because there's no money here in the I mean, there's $1, but that's just for template purposes. There's virtually no money in restricted net assets. So all of your cash can be used as I say, to keep the lights on. That's how I refer to unrestricted, keep the lights on. Okay, big deal. What does this mean? Now let's put context behind it, part of our storytelling. Put context behind it. The monthly expenses average $136,000. How do I know this? Because I looked at last year's total expenses for the year and divided by 12. So here's your context. Your average monthly expenses are 136,000. Now let's put it together and talk about the story. The story is that this organization has 5.6 months of cash on hand. If everything stopped today, they could pay their expenses for little over 5.5 months if nothing else happened. That is an important metric. Donors, grantors, stakeholders, leadership like to see this number at 3 to 6 months. Of course, the higher the better. So in this case, this is a nice number for their fundraisers to share whenever they can because it's a healthy organization. Again, I just put this up again to refresh your memory. Drawing your eyes halfway down, you can see that conference-related expenses last year were 922. This year they're 308. Also take a peek 2 lines up from that. Your personnel expenses decreased $282,000. So now we're really going to put a nice big bow around this whole thing. What does all of this mean? So this is a great executive summary for board members, also for donors and grantors. So the mission, we're going to start with the mission because we always want to keep the mission in the utmost mind of leadership and stakeholders. So the mission of this organization is to educate members and create community. Now, again, if I weren't trying to protect some privacy here, I would say to educate members on the challenges that homeless people face, or I would expand that mission statement, not just to educate members and create community. So that's the mission. Now, where do we go from there? Well, we saw on those bar charts that a significant percentage of revenue comes from event sponsorships and registrations for our annual meeting, which is designed to fulfill that mission. The whole point of the annual meeting is that mission. In 2024, the event was held in New York City, where high costs associated with the area significantly affected both expenses and registrations. As a result, so here's the storytelling journey. The main character of the organization wants something. They don't want to lose money and put themselves out of jobs and leave their stakeholders high and dry and not be able to, in my example, feed homeless people. So they want to stay alive. So they had to struggle to do that. And in struggling, they moved their event to Indianapolis, achieving meaningful cost savings and increasing attendance by 20%. Now, here's what's important again. We're giving context to the story and the struggle. Due to the 2024 deficit, we made the difficult decision to eliminate 2 positions. Remember, we saw that in the previous slide, the salaries and personnel costs came down. That impact reflected in decreased membership revenue and sponsorships. Why? Because one of the 2 positions eliminated was a membership person. So consequently, we saw some revenue drop as we would expect. To offset this, we expanded our virtual training and certification programs. Virtual training in particular has shown great promise, generating increased revenue at lower cost. Okay, here's what wouldn't fit on this slide, but if I were building this out to meet with somebody where I had more room to talk about this, here's what's happening. That 2024 loss number was a slap in the face to this organization. And so they quickly said, we have to pivot and we have to pivot quickly. They had to make some hard decisions to eliminate two positions, which we saw in the previous bullet. We saw in the personnel costs coming down. But what they're doing is they're investing in the future because they're understanding that their current business model is something that their members increasingly don't see any value in. So they're sticking their toes in the water of trying some certification programs, which was virtual, and virtual training programs. I specifically focused on this when we looked at the bar graphs of that because it was a very, very tiny percentage of their revenue. But we did see that it increased from the prior year. In 2024, they didn't make as much money doing that as they did in 2025. So it's showing promise. They're seeing an upward trajectory in revenues. So they're saying, hey, this is something we need to continue to explore and build out because if we're losing people who are attending our annual conference and our events, we can maybe make that money up in virtual training. As all of you probably know, if not from your organization, but from personal experience, virtual training is the hot thing right now. You can go online to learn anything from flower arranging to welding. So this organization recognized that trend and they're dipping their toes in the water. The bullet second from the bottom, it says we also reduce spending on content development with no measurable impact on revenue or performance. Wow, that's mind blowing because typically your content developers will say, well, we got to keep feeding fresh content out. This is the advantage of storytelling with your numbers. Your content developers think you have to keep pushing content out because that's what, thought leaders in the internet teaches us. You always have to push content out. But in this organization's case, no, they don't. And we know that because they reduced their content development with no measurable impact on revenue or performance. So finally, together, these changes shifted our financial position from a net deficit in 2024 to a surplus in 2025. Given the growth of virtual training and certifications, we will continue to expand those offerings. Hopefully, you're all finding that executive summary a little bit more interesting than looking at a bunch of numbers on a spreadsheet. So now you have all kinds of opportunities to tell your story. And this is something that many nonprofit leaders overlook. Because first you have, if you do an annual report, of course you can tell your financial story in your annual report. Of course you can. But here's the other thing, which I don't have up here, but I should. In your tax return, you can tell your story because your tax return, and some of you, and Christine, I know you're one of these people that you've had donors because we've had this conversation who actually look at the tax return and question you on it. And so, therefore, you've certainly read your tax return, your organization's tax return, and there's an area in there where your organization can talk about their mission and talk about their successes in the last fiscal year. And it's kind of an area where you can brag. And if you take that opportunity to brag, it's great opportunity because your tax returns are public record data, unless you work for very few nonprofits, churches being one that don't have to do that. But if you're not here working for a church or an organization that doesn't have to file a tax return, it's a great way to brag about all your accomplishments. You might also be doing impact reports. So, what are impact reports? Last year, we fed 1,000 homeless people. This year, we fed 2,500 homeless people. To accomplish the increase in the number of people we fed, we had to hire 10 more people, increasing expenses, but we found a grant that funded it, increasing revenue. Those are impact reports. Don't forget your websites, your social media, and of course, infographics. Now, those charts you saw were rather boring, done by an accountant with zero creativity in my bones, But if you take your financial data and you actually have a graphic designer do something a little bit more appealing to the eye than I did, it can become a great infographic. And don't forget to tailor your message for each audience. So, obviously, your individual donors may have very different motivations for giving than your corporate donors or your grantors do. So, you want to focus on the part of your story that will resonate more with whoever you're talking to. All right, common pitfalls when you're telling your financial story. Data overload. I did that to you on purpose in the very beginning with those spreadsheets so that you could appreciate that more data is not always better data. Lack of context. I gave you the example of LeBron James' first NBA season. If people weren't comparing his performance to Michael Jordan, his performance isn't as meaningful just standing on its own. But the minute you compare it to another absolutely phenomenal player, now his performance has a lot more meaning to you. And then the other thing is that you want to keep your reporting relatively consistent from one month to the next because people get used to seeing reporting in a certain manner. Like you saw that previous page, the executive summary for that organization, I would keep it similar for every single month I did an executive summary. So, your key takeaways, especially for all of you, because if all of you are in fundraising, you are telling stories about your organization every single day. Recognize that your data can add to your story. It doesn't have to be boring, it can make your story more meaningful. Focus on the why behind your data. So, again, in this example that we've gone through today, the why was they lost a lot of money in 2024. That's the why, and they need to sustain their organization. What happened because of that? They moved their annual meeting and they started pursuing certification in virtual live trainings. They're changing as a result of their struggle. Transparency, you need, as a nonprofit, you need to be transparent and honest with all of your stakeholders. But what's the most important thing is actionable insights for impact. So, my example, they lost their shirt in 2024. They could see it largely resulted from their conference. So, they said, let's move the conference to a less expensive area and see what happens. 2024 gave them actionable insights to change 2025. And in their case, they did. Any questions, comments, suggestions?
Thank you for this, Jackie. I don't see any questions in the comments. I think it was, we'll give people a moment if they'd like to drop questions in the chat or come off of mute and ask a question. I know for me, it was really helpful just to continue to see that your financials aren't some boring thing that you avoid as a fundraiser. It empowers you to talk about those conversations. And I know for myself, I would always ask our finance team if I didn't understand something. So if a donor asked a
Mhm.
question, I knew how to answer that question. And it's really important because I think now as donors continue to get more savvy, with publicly available data and, a lot of websites, it's a very good thing to be equipped with the information to be able to talk about it.
And
Um,
Christine, I would also add if you ask your finance person to help you with that and you don't understand what they're saying, keep asking until you do understand what they're saying.
oh yes.
Because oftentimes, accountants can make things sound a lot more difficult than they really are. And everything in an organization mirrors your personal life. And what do I mean by that? In your personal life, you bring money into your household. You have to spend money to keep your household afloat, food, clothing, shelter, that kind of stuff. Hopefully, at the end of the year, you've brought in more than you've spent so that you can put money in your savings accounts. You have two, hopefully, you have two savings accounts. You have your emergency savings, and then you have your retirement savings. Your organization is the exact same thing. So when you're asking your finance people to help you understand this, keep asking until they can put it in a way that you can understand what they're saying.
Thank you. That's great advice, and I know it has to make sense to you for you to be able to share it with potential donors, stakeholders, or corporate partners, or whether it's either in person or through a grant application. So
Mhm.
I
And
agree.
I also want to add, I didn't cover it in here, but the other thing we did in the membership organization I was in is that we did have a membership database. And so when we were losing members or not losing, well, yeah, they weren't renewing, we really took apart that membership database by zip code, by industry, by street, by area in the county. And we tried to find where did the data tell us our biggest donors were coming from? And in our case, it wasn't a zip code, it was a particular industry. So once we were able to use the data, the historical data, to help us understand who appreciated us, and again, in our case, it was a particular industry, then our membership people could go after more businesses in that particular industry. Then our leadership team could create events around that particular industry. So your finance people can also help you dissect the data in that way to help, as I say, point and shoot you to some possible prospects.
Thank you. Um, I don't see any questions. I haven't seen anyone come off of mute. So again, Jackie, I just want to thank you and the entire team at Chazin for presenting the session today and also for being AFP Miami chapter sponsors. We really appreciate it. And oh my gosh, you have a free giveaway.
I know, I feel bad. I just remembered to forward the slide. Yes, we have three different free giveaways: the financial storytelling framework, a data visualization best practices. And I want to point out that on that particular one, because you probably saw my ugly, well, you did, you saw my ugly charts. I didn't write this one. Our, our much more creative marketing people wrote the data visualization best practices guide and then sample financial statements with some narrative examples.
Fantastic. Well, this is great. Thank you so much. And we'll also email this piece to all of everyone that registered and send the recording as well. So again, Jackie and everyone at Chasen, thank you so much on behalf of AFP Miami. We appreciate you and have a great day.
Thanks, Christine. Thanks, everybody, for coming.
Thank you.
Bye-bye.
Thank you,
Bye bye.
Jackie. Have a
Bye
good
bye.
one.
Thank you.
Thank you.
Let's see.